Hey, everybody, and welcome back to Talking with Traders. In this show, we get to know the people behind the trades, the people behind the Twitter handles and the tweets. And we're back from our break, and got a great guest for you today. So, with the intro out of the way, I want to introduce Jermaine Mcgregor. You may know him as a Strat Soldier. Jermaine, thanks for being here.
Hey, what's going on, Dan? Thanks for having me. I'm excited.
It's great to have you on. I want to start. You've got a great background. You were in the military. Maybe tell us a little bit about what you were doing before you got into trading.
Well, I'm still in, which is
Okay.
awesome. Still doing it, and I don't know. I always tell everybody, no matter what career you're in, don't count the days. Just one day at a time, one day at a time. But I've been in for a pretty good long while, and I get pretty good at being in the army. They teach you how to be a leader. You know what I mean? They teach you how to take care of other people. That's a lot about being a soldier. So um, I got one of my buddies wanted me. I wanted to get into stocks like early 2019. I wanted to get into this stuff, and I had a buddy show me how to buy stocks and get in on things and how to buy and fund an account and all the basics. And it seemed to be pretty easy, and that's how I got in on it. And then I made some mistakes, and then I found the strat, and then the whole soldier side of me was like, the leadership side of me was like, I need to show other people how to do this because they don't need to do what I did. um,
Makes sense. I was going to ask, how did you come across the Strat?
the strat. So what happened was, the same buddy who showed me how to buy stocks. I got pretty good at it after a couple months. I'm like, how do we make more money? How do we? This is kind of, I'm getting pretty good at it. Nothing wild, no 2,000% gainers, nothing like that. It's just buying stocks and holding them, and they're green. So he taught me how to buy calls and puts into earnings reports. and
Okay.
Yeah. And the first time, so I buy, I'm reading all this news, and Twitter has never had at the time, Twitter never failed or missed any of their earnings reports. You know what I mean? So he's like, buy calls, and then you're gonna, after you make so much money, then you can cut your options and then buy the stocks again, and you can hold them, and then, so he's giving me the whole spiel. All right, fine. I get in there, I buy some calls right before the earnings. Earnings hits. It's the very first time they they lost, and they missed earnings, and I lost all this money. Like I half my account overnight, and that was huge for me. I was like, this is because I've already convinced my wife, like, hey, I'm not gambling. I've myself too. This is not a movie. This is real money. My family lifelines, all of it's on the line. I'm not gambling. And then I take a big hit like that. I'm like, so I stopped trading. I didn't quit. I just stopped trading, and then I just kind of went out and tried to find a coach or a mentor or someone to teach me how to do this stuff for real, other than my buddy. Got to feed me information, and then that's why I came. And then I came across the strat because I was looking at uh, for some reason Forex has a lot of, like, the big thing on the Instagram where they show a bunch of charts and where to get in or where to get out, and based on like patterns. And I didn't know it at the time, but it was technical analysis. I just didn't know what it was. Um, and then one of them had these reversals, and end up being the strat. And this one had an article attached to it, and that post in that article was called. It was called "What Do We Know to Be True About Price Action" by Rob Smith, and I learned more in that one article than I have in anything else I've seen before, and I was immediately hooked. And then that started my strat journey.
So let me ask you, the Strat is this thing that comes up a lot on social media for traders. How would you describe it in just a few words to like a brand new trader?
Uh, Few words for a brand new trader. I'd say it is quantitative trading based on price action alone. That's what I would say.
So I was going to ask, in the Strat, there's a bunch of different patterns. How do you like train your eye to start to see them?
It's really visual. The strat is very visual. We have three scenarios. We believe there's only three ways anything can trade. Scenario one, which is an inside bar, and I can show you that on some charts if you want me to start that now.
Yeah, go ahead, man.
Cool. So if you look at this, if you know who I am, the Strat Soldier, I got all four charts up like this: the monthly, the weekly, the daily, and the 60. Okay. Now let's go down to this. Shows me the time frame continuity of the market and it shows me the aggression of participants. Right now you see there's sellers on the month. You got a 2-2 reversal up on the week, but the day and the 60 are red. This lets me know that the sellers are definitely a lot more aggressive. So let's pull up one.
When you said full time continuity, can you just define that? What do you mean by that? Because
Okay,
I think a lot of people here just aren't up on the lingo.
oh yeah, I apologize. Time frame continuity. It's basically a multi-frame analysis multi-frame analysis where we're using the monthly chart, the weekly chart, the daily chart, and an hourly chart to basically look at the color of what of the participation groups. Um, if it's red on the month and it's red on the week, I know that the sellers are in here. That there's no doubt. And then I'm looking at the dailies. That lets me know, okay, it's red on the dailies, they're selling it today. And then I look at the 60-minute bars, that lets me know if they're buying or selling right now on these 60s. Every hour we look at that every hour. At the bottom of the hour, this brand new hour, and then we see, is it green or red? And
Got
the
it. So
short
for
answer
it to
is,
have full time frame continuity, what would it look like? It would be like they would all be green, right?
yep, full time frame continuity would be all green or all red. That's full time frame continuity. You don't need full time frame continuity to trade, but that's what we tell the brand new stratters that come to us. Especially for working options. I don't want to work options on something that could turn on me really quick. So we look for full time frame continuity, where it's green on the month. They've been buying it all month. It's green on the week. They've been buying it all week, and then they're buying it today. And then on them 60s, they're buying it today, right now. So, and then the same thing in reverse for if you want to work puts. People are buying. You could go to PayPal. It was already red on the month. It was already red on the week. So when that earnings report came out bad, it wasn't a surprise to us. Um, we didn't buy into earnings. We tell people don't buy into earnings like that, because you get wrecked. But
Hmm.
it wasn't a surprise to us that it went down. Now that it was a surprise as far as it went down, it went crazy down. It's really far down. There's actually a 2-2 reversal down on the year, but um, so like I said,
Okay,
the time frame continuity is more like the weather. It's always there. You know, it's always there. Full time frame continuity is something different. At a minimum, you definitely want your dailies and your 60s to be the same color.
that makes sense. So then you were talking about 2 2s and 2 1 2s, right? I think these are some of the bits of lingo that make the strat confusing. Maybe you can kind of just explain what you mean.
Yep. So on Trendspider, if you go to Trendspider, is a great indicator in here. The strat is already indicated in, excuse me, already integrated into Trendspider, which is awesome for me. Uh, so here are the labels right here, and there's only three ways anything could trade. Scenario one, okay, and the strat is pretty repetitive, so it's not going to take too long to find one of these. And let me see if I can blow this up for you. A scenario one does not take out either side of the previous range. This bar right here, the weekly chart of the SPY, see that right there?
Hmm.
It doesn't take out either side of this previous range right here. This weekly here, see, it's trapped all the way in the middle of that inside bar. All right. Scenario two, let's go down to this one. A scenario two takes out one side of the previous range. So this right here, scenario two, takes out one side, the top or the bottom. All right. So you got these series of twos. A series of twos in one direction is considered a trend. Two, 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 two up. Then you'll
Got
have
it.
scenario twos down where it takes out the bottom. Only takes out one side of the bottom. Scenario two down, two down, two down, two down. Now a scenario three. Let's go. Here's a scenario three right here, but I want to find a juicy one. I want to find you a good one. Here's just scenario three right here. Green takes out both sides of the previous range. Takes out the top, takes out the low. That means they sold it. They sold it all the way down, and they bought it all the way up, and it closed in that same time frame. Okay, and that's our battleground. battleground. On a smaller time frame, this is a broadening formation, and that's also broadening formation is a really big deal in everything we do with the strat. But if you just know the scenario 1, 2, and 3, you can combine these scenarios to find what we call reversals. For example, you have a perfect 2 down, 2 up, 2 2 reversal right here. 2 down, 2 up, and I would get
Okay.
in right at 441.88 and just work it till it ain't working no more. And then once I get a reversal, a scenario down, with here's actually a scenario 3 where they bought it up and then they sold it down on this week here. Looks like November 22nd. I know where to put my stops. So I would get in here, work it, work it, work it, work it, work it. All right, it's starting to get a little ugly right here. Got a scenario 1. It's not reversing against me just yet. Scenario 2 up. This thing might work. Next week comes in, 2 up, and then that fails. Takes out the top and the bottom, which is scenario 3. I know to put my stops right there, take my profits, walk away, and then I don't have to deal with all this other stuff. And I'll just wait for another scenario to come back in on if I'm going to work it. But that's what so scenario 1, 2, and 3, and like I said, we'll combine those things to create reversals. And then we use time frame continuity, all 4 charts up of the 4 major time frames, and then broadening formations. You'll see a broadening formation here on the weekly here, and then we'll.
So so I was going to ask about these. Most traders, myself included, but most
Go ahead.
traders look for
Mm-hmm.
when price is compressing, right? Like the
Mm-hmm.
opposite of this broadening formation. Why do you
Mm-hmm.
why do you look for broadening versus compression like most people are looking for?
So I look for a broadening formation because I like it's easy for me to see um, if something's stuck inside and doing nothing. Okay,
Okay.
as opposed to something compressing and they say it's coiling or it's going to break out. It's going to break out. As opposed to that, we believe that price discovery works through a series of broadening formations. So they're going to test the highs. They're going to test the lows. They're going to test the highs. They're going to test the lows. And we use these scenarios to work reversals to the highs. Okay, top of the broadening formation. Now they're working it to the downside. If you're good at options, you want to work puts, you have a reason to work a reversal to the downside. And then you take your profits, cut it, and then it's kind of ugly in the here. But
Hmm.
what we're looking for is the trade as it goes up and down and up and down and up and then down. And now you got your 2 to reversal on the week on yep, right here, 2 to reversal on the week right at 444.19, and you work it all the way up. Didn't quite take out our target at 4610, 460.10, but you definitely have a reason to believe to work this thing because you have a reversal back up, and hopefully we can get back up to the top of this broadening formation. That's what I want to do. I want to work it as it's going up and down and up and down. As I work, if I'm going long, and I'm only good at going long, I'm a new trader. I'm not good at options. I'll work it till it gets to the top, and then as soon as it starts to reverse, take my profits and wait. Okay, now it's down. Now it's starting to reverse back up, and then I get in on that wave. So it's kind of like riding the waves, kind of, so to speak.
Got it. So in this current scenario, right, where you have this 2 up, but it's a big long wick, right? Where would you put your stop? If you entered that trade on the break of the previous high, you'd be really close to your break even right now.
Yep. So, and that happens. That happens. Let's go down to 1 bar chart. Excuse me. Let's do this 1 chart. Yep. Because they give me my drawing tools. So that does happen too. So let's say I bought it here. I'm in. All right. It's going great. It's going well. And then so we set our stops. I set my stop right here. Okay. Now the trade's working. I don't have to worry so much about it. I can go about my day, go about my business because I go long with common. That's why I like to trade common because I don't have to worry so much about it. It does move around, but it's not so volatile as with options. Options can go against you really fast. So I'll put my stop
Yeah.
right there. I'm in at 444.04. Put my stop at 439.81, and I'm just chilling, just waiting. As it starts to get up in here on the daily, I would use the daily charts as it starts moving up. Then I can move my stop even. you know. And then honestly,
Hmm.
I would use the, let's drop down to the daily. Will these go? Yep, 444. Where is my other line at? It's gone. Anyway, what I would do is use these bars to push my stops up, and then you got this 2-2 reversal back down. Then I get stopped out with profit. That's what I would do there. Um, or you can just
Got it.
hold your yep. Or you can hold your stops even. Let's go back to the weekly. Hold your stops even, and let's say it got up in here. You hold your stops even. If it's break even, if I'm trading common and it breaks even, I don't lose any money. I don't. I use TradeStation. I don't have commissions when I buy stocks, so it's easy for me to be like, you know what? If I get stopped out of this, it's no skin off my back. It stinks. I didn't make no money. You know what I mean? So I got two options.
Yeah,
Either I push my stop up the dailies and I get stopped out with profit, or I put my stops even and let it ride, and then and then not push my stops up until I get a reversal back down on the weekly. Does that make sense?
it does. It does. Well, tell me about the trade you took this week that you're most proud of.
Oh yeah.
Maybe a great example to show.
Right now, this week, SLB slob. Anything in energy has been awesome. So
Okay.
let's go to the monthly. Anything in energy. You see right here, I already got it marked. I was showing someone else. You got a 2-2 reversal back up on the month. If this was and then XLE yearly charts. If you look at XLE on the yearly charts, you got a 2-1-2 scenario 2-1-2, two down inside bar, and then scenario two up on the year for XLE. So there's buyers in there, and I know there's buyers in there for the week, the quarter, the month, the year, all of it. So it's all lining up. You want to talk about full time frame continuity? It's all there. So SLB for the month, I like to work monthlies and weeklies because I do have a day job. I do have a full time job. I'm in the army, and sometimes I can't look at the charts. There's a lot of times I cannot stare at the charts. So I'll get in on a reversal in the week or the month, and then as it gets up, as the price moves up, put my stops even, and let it ride. Or if it's something I know it's gonna do this thing, it's going to move up and down a lot. I will push my stops up one of the smaller time frames and do everything I can to get stopped out with profit and make sure it's not a loss. But right now, slob SLB. How do you pronounce that, Dan? I don't know how to
Yeah,
pronounce that.
Schlumberger. I don't know.
Schlumberger.
Schlumberger.
So we just call it slob. My entry was 31.27, and I'm just, like I said, keep my stops even, and I'm just working this thing. Now, this is January. Okay. So you got your scenario two down, scenario two up, and now I'm in. Once it started getting up in here, I moved my stops even. And now we got a little nasty inside. It's inside. Okay. Right here. So it's inside bar
Yeah.
right now. It doesn't necessarily mean I need to jump out. Okay. But if this starts coming down too far, that, especially on the weeklies, I might consider go ahead, just go ahead and cut it. That was fun. Cut it and then get back into it later on. I still have that yearly signal in force, meaning it's trading above my actionable signal, which is that inside bar to the upside. And as long as it's above that, I can wait until it gives me another setup on a smaller time frame to get back in on that. But SLB slob, I'm loving that one. APA is another good one.
Okay.
Another one out of energy, um, and it's been rocking too. Same thing, 2-1-2 reversal up on the year, and then on these monthlies, my yep, right here, another hammer. Just no, that's not a hammer. It's an ugly hammer. Ugly hammer because it's not technically a hammer. It's just a little ugly. But 28.63. Buy some shares, let it go. As soon as it gets up in here, it's still good. I don't it's making money. I need to sell it now. No, no, no. I want to be in it as long as possible. If it's a winning position, I'm gonna keep working it, and I'm gonna keep adding into it, and keep pushing my stops up until I get stopped out with profit. I try very hard not to have losers, and I show people how to do that as well.
I
And
love that.
Dan, it's impossible to not have a loser. I'm just saying I do everything I can to make sure I keep pushing my stops up so that if something crazy happens, boop, take my, get stopped out. I'm out. Take
I
my
love
money,
the
walk.
methodology. A lot of people don't have like a system, right? Like they pretend to have a system, but they don't actually have any rules, and therefore they can't really follow them. But what you're doing here is very systemic. I like that a lot. What was tell us about a loser. Like when does things go wrong?
When do things go wrong?
Yeah.
Oh, geez. Gap ups and gap downs are hard, very hard. I'm not really great at options. So what I do is I will go long SPXS, and because you can go long comment on that, and also SQQ. You can also go along with that with common, and then
Hmm.
so some losers on that. You get in it, it's working all day long, and then overnight, the futures start rallying back overnight, and you come in and it's a loser no matter where you put your stops at, and that stinks. So gap downs are hard. With any kind of trading system, gap ups and gap downs are hard. So, and that's where a lot of people get chopped up at. So yeah, a loser is definitely for us. A loser is a scenario two down or a scenario against you. I'm going to say that. So let's say I'm taking a 2-2 reversal back up. So a scenario two down. Okay, scenario two back up. Now we're working the upside, and then the next bar opens, and then it starts going back down like we've been seeing it all week. It's been
Yeah.
crazy. You get a bar down, and if I don't have my stop set even, or I got my stops set way too far down, and I'm just watching this thing. Uh, a two-two reversal against you, a stop out. That's bad. That's bad. And then
Yeah.
same.
Or
Let's go.
when the two goes into a three, right?
Yeah, that's also bad too. That's yeah. Everybody's got a plan until they get a scenario three to the face. You know what I mean? What did
Yep.
Mike Tyson said that? No, he didn't. He said Mike Tyson said everybody's got a plan till they get punched in the face. But that's how I see the scenario threes. Just like right here on APA on the month. Let's just say I worked it right here. I got this nice 3-2 reversal right here up, and it goes all the way up to 33.64, and then it starts coming in. But okay, it didn't hit my stop. I'm fine. But then the next bar comes in. Now I got a 2-2 reversal down. It opens up here and it starts dying. Now below 25.19, if I don't make a decision, if I just let it ride, you know what I mean? I don't do anything. I don't have no stops in, or I do this thing where it's a mental stop. Those
Yeah.
guys. And okay, so I ride this thing. Okay, fine, it wasn't too bad. That's too bad. Now the next month opens. Here's March 2020. This is actually COVID right here. That wasn't on purpose. I'm just looking at the broadening formation. But I ignored this here. Okay, I ignored my loser. Now the next bar opens and this thing just plummets all the way down to $3.95. Holy crap!
Wild.
So yeah, and that's hard, and that's tough. So that's definitely a scenario against you. So that's a 2-2 reversal against you. Um, and then, like I
Do you
said,
always use a hard stop?
I always use a hard stop. Yes, I always do, and that's why I like commons because I can do that. With options, not so much. You can't do a
It's
hard
harder.
stop with options because you'll put a stop limit in there. Sometimes it's too volatile and it won't trigger.
Hmm.
When it comes to options, what I'll do is I'll use a trailing stop. So I'll put in once it's profitable, I'll put a 5 cent trailing stop in there. I did that with AMD over the week. That was a good trade. Two to reversal back down. Let's look at AMD real quick. AMD after
Check it out.
earnings, that thing popped up big time. It was awesome. Let's go to the 60s. Bam, right here. So this thing, we don't buy in the earnings, but you could have bought something in here. Anyway, 2-2 reversal back up, bam. This thing gaps up huge. 2-2 continuation up. It opens up at 129. Everybody's watching it overnight. This is amazing. If you're already in this thing, you take your profits. That's what everybody did. People started taking profits, and we were looking for this because the price is up. Now we're looking for the 2-2 reversal back down. And then as soon as it hit 123.86, now you got a scenario two up, scenario two down, and they're both red. Okay.
Yeah.
Um, got a reversal down to the downside. I know they're selling it. And then right at 123.80, you can start looking for puts. If you're a ninja, you can start doing it up in here on that first 60 down. But once I got this 2-2 reversal, I know it's safe to start looking for it. I worked it all the way down, and then it's profitable. And then I put in a, I immediately, I hate options. So I go in quick. I'm like, okay, it's profitable. Put in my trail stop for a 5 cent trail stop, and then it'll tick, and I'm out. And I take my profits and I walk away. I don't mess around with options. I've done that before. Like you I've learned to make
It's
my own
tough.
rules. Yeah, it is tough. It is tough, and I've done that before. You're like, okay, 2-2 reversal on the 60s. I'm buying puts, and then I
Well, it's that
put my.
time decay that just kills you,
It is. It
right?
is. Yeah. Yeah. Ask your homeboy Theta why you can't hold an option all the way to expiration.
Right? Such a
But I've
joke.
done that before. You buy puts, 2-2 reversal down. I'm good. And then you put your phone in your pocket or however you trade, and now I'm driving the truck. I'm doing all this stuff. I get done. This is, and I come back to work. Let's just say it ended here. Okay. I'm looking at my chart here over my camera, but let's just say it ended right here on this bar. And I look at my option, my puts, and this thing's way against me because I wasn't looking at my option anymore because this 2-2
Yeah.
reversal down, I'm good. I let it go. Now this one would have worked out, if I would have held it, but this whole bar would have been nasty if I just would have held through all that. So anyway, what I'm saying is I would buy options, go back to work, go do things, come back, and this thing is against me and I'm losing all this money. I hate it. So
I'm
so
the
what I'll
same way,
do,
dude.
yeah.
I
So
cannot trade options. I screw myself every time.
Oh, so you should try it. You should try this. You should try this trailing stop. So what I'll do is I'll go straight to the position, and it'll, I actually close position. I hit the button in trade station. I go trailing stop 5 cents. It's profitable. You know what I mean? Whatever I get's bonus money. My analogy for trading is I'm a tank. Okay, I'm a big tank. I only got so many rounds in this tank. I'm gonna find a position like XLE that's got a big reversal to the upside, and I'm parking my tank right there, and I'm gonna keep firing on that position until it ain't working no more. Until I'm not winning, then I'm gonna leave. But on that tank, I got a 50 cal machine gun, and I will do a day trade like I did on AMD, and I'll get in there and real quick and take my wins and leave. I put that weapon up. I don't need it anymore. But then I'll go back to XLE, which is what I've been doing. So instead of jumping around and trying to find what's working for the day, that brings me back to what I was trying to say. I do
Okay.
weeklies, monthlies, quarterly trades. I'm not trying to jump around. I'm trying to just chill and just big money.
All right. So, one of the things that always screws me up with options is you got to be right about the direction and the timing. Like, why do you prefer common over options? Because with the strat, you're trading it in the moment, right? So you have at least some idea as the timing, right?
Yep. I agree with what you're saying. You gotta get direction right. You gotta get the price right. You gotta get the strike price right, and then you gotta get the Greeks right. So and then that's
Yeah.
a whole nother thing. You got the theta. You got the delta. Do I get in? When the delta's point 0.4. You know what I mean? Do I not get these? Do I go out of the money? Do I go into the money? You know. And there's a lot of that. So I would tell people, especially new straters and new traders, period, especially if you're a small account, go find a class. Find a class on options. Trendspider has a lot of classes that they put out. Join one, learn this stuff. Don't get on YouTube and watch 3 hours of YouTube thinking you can do this stuff and then go outside, or excuse me, go into the market the next day and buy puts on the spot because you think you can do it now. Because that stuff will drop 20 cents in a matter of seconds. And 20
Yeah.
cents, it says 20 cents on the thing. You're like, okay, it's only 20 cents. But we all know if you have any experience in options, that's really $20. So it
Yeah.
says it's fun when it's going with you, and it's fun when it's working, and it's not fun when it's not. So that's what I would tell new traders. Period. Go learn that stuff before you actually learn it. Before you
Totally.
actually do it. Yeah. Get that
So, do you have
education.
any hard rules that you follow? Like, do you some traders have a rule where when I make X dollars in a day, I'm done, or if I lose 3 times in a row, I'm done for the day. Do you have any rules like that?
Yep. I started creating my own rules along with the strat, and which kind of goes into why I started working common, because being a small account guy, they're like, yeah, buy options because it's cheaper. You don't have to use so much capital to buy these
The
things. But
leverage.
yeah. But I kept getting all these losers, and the losers are 50, $60, and I'm like, wait a minute, hold on. It, Let me start thinking about this. If I just made 50, $60 a week or $100 a week or whatever it is, if that stuff adds up, just like these losers are adding up. So let me go ahead and do what I good at. So then I started looking at my trades. What am I actually good at? I'm actually good at doing weekly, monthly trades. I'm good at staying on stuff that is um, good on a larger time frame. So that's what brought me to commons and just buying shares. I was already doing it before. Let me go back to it, and then like I said, I'll use options sparingly. And then so what I'll do is one of my rules is three strikes and you're out. Okay, which
Okay.
is the reason why I don't trade Tesla because it has such a big range. Tesla will drop $10 in 5 minutes and go back up $5 in 10 minutes, and $10, $15, and I'm talking, and it this is not options. This is just the share. You buy one of these things, and it can wreck you. So what I'm saying is, if I get in on if I get in on a reversal, and then I get stopped out, okay, that's one. I get in, I get stopped out again, that's two. Now, based on what ticker I'm trading and how many shares I'm putting on, and I always get in with a small size at first, and then I'll add to my position. Okay, so the reason why I do that is because if I get stopped out, if there's something wrong and it's too volatile, if there's something's going crazy in the market, or there's a big player out there that just if Dan's out there and he's got this thing and he's already made his money, I'm cutting it right here, and this thing starts dropping because he's a big player, he's got all this money, and I'm just saying it goes scenario three down, and I get stopped out again, I get out. You know what I mean? I'd rather take a small loss than try to hold on to it and just pray, it's going to come back. You know what I mean? So what I'm saying is, uh, if I get stopped out three times on something, I'm leaving. I'm leaving. There's something
Makes
else
sense.
wrong here. Either the spread is wrong, and spread does matter when you're doing common as well. Go look at Carvana. It's got like a dollar 50 spread, and so you buy something, and then you gotta look at the spread and go, okay, once it's offered above my actionable signal, then I'm getting in, because if I buy it
Yeah.
as soon as it trades above that, I'm already in the loss. Like there's so you got to look at stuff like that.
One thing I want to ask about. So you mentioned you start small with a small position and then you add to it. So you're averaging up, right? You're
Yep,
not averaging down like what most people do.
correct. Yeah, if it's a loser, I'm cutting it big time. I'm out. I'm not fooling with it. And because I do that, um, I get in with a small position. So it's kind of
Makes
like
sense.
baseball. It's kind of like baseball. I got two analogies. One of them's football. The other one's baseball. Baseball. So I'm at the pitcher's mound. Excuse me. I'm up at bat. Crack. I hit the ball. It's gone. My only goal is to get to first base. If I can get to first base, I know where to set my stops. All I'm trying to do is get on first base. Then I set my stop, and then I push my stops up. Okay. Now, if I can, if the price keeps going in the direction I want, I get the second base. Cool. Push my stops up. And now, if the pitcher is good, you know what I mean. Bam, I get stopped out. Or he throws the ball, I'm out, and I'm on second base. I already get stopped out with profit. I've already made it to second base. If you think about it like that, and then
Yeah.
so on. So if I can get to third base, now home run. If I can get a home run, you know what I mean. I have all three bases all the way home. That's awesome. That's amazing. So what I want to do is when I'm trading, I want to get, then you have those foul balls, just like I was saying with getting stopped out. I get in with a small position. So if I hit a foul ball, all right, small
Doesn't hurt as
loss.
much.
Yeah, it doesn't hurt as much. Doesn't hurt as much. And then, you know what I mean? And, another foul ball. Now, I'm not going to sit there and just keep doing this. I'm not going to keep buying I'm not going to keep buying Facebook and try to buy the dip on Facebook or trade this reversal back up on Facebook if it's not going to go. Um,
Yeah.
so if I get, I'll try it. Bam. Okay, it worked. Now, no, got stopped out. Done. You know what I mean? I'll try it again. No. All right, let's walk. Let's go find something else. And then I'll go to my watch list, um, and I will pick something from there. Now that goes back to another one of my rules. I follow Rob Smith. I've been following Rob Smith for a long time. Since 2019 is when I found, and I joined his, I bought his course, um, joined his live room. I let him teach me. And so anyway, what I'm saying is he puts out a watch list every week. I follow that watch list. He does the same thing
Okay.
with macro charts, and I follow that watch list. I'll find my own. I will find my own actionable signals, and I'll put those on the list as well. Um, but I go to my watch list, and I don't. I don't. I rarely will go find something that's. I'm not going to go to Boeing just because Boeing's popping up right now. I got a 2-2 reversal on the 60, and it's Boeing's going up right now. You look at Boeing on the year, Boeing's really good at going down. so I'm not gonna do it. So, and then there's nothing like AFRM. That was a good one for a lot of good traders. For a lot of traders, that was a good one. AFRM. I didn't touch it.
Affirm.
I didn't touch it at all because it wasn't on Rob's list. And then me personally, it didn't have enough data in for the monthlies for me to get in on this. Why? Why am I? You know,
Let me ask you, just curious, what are some of the like, in your opinion, what are some of the big mistakes that new traders make when they first encounter the strat, right? So people who are brand new to the strat.
brand new to the strat. They think it's magic. It feels like
Okay.
magic, but it's not. Let's just say when I get, let's just say the good ones, let's say good ones, traders that start with the strat and they start making money. Okay.
Okay.
And it's good. They like it. They know the reversals. They're getting in on, they think they know time frame continuity or broadening formations and they're making money. Okay. Then the market changes. Just like we've all seen, Dan, the market changes and
Yeah.
then things volatility also changes and you get an outside bar on to the downside in the SPY and then the VIX starts jumping up and these new guys they don't new traders I'm sorry they don't know they have not seen a whole market cycle they have not seen the market change they've not seen you know Fed hikes and all these other stuff all these other things so what they do is they keep trading like they were when everything was green on the month the week the day the 60s they keep you know what I mean because I'm going to make it back I'm going to make my money back because they started taking losses
Revenge trading.
revenge trading. That's it, revenge trading. And they think the strat is a secret weapon, but it's not. You still have to. It takes work, is what I'm saying. You get these traders that will get in here, they do real well. Then the market changes. You have a new month, new time frame continuity, and they think they can keep doing what they were doing instead of adjusting. You know what I mean? Just like in the
Yeah.
army, you know what I mean? You adjust fire. This is where the enemy was. Bam, 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 bam. Now it's over here. Now they're not adjusting. They keep trying to do this stuff over here in the green, but now we're in the red. If they're not going to
Yeah.
work puts, if they're not working puts, um, they just need to stay out, and they're not staying out. They keep trying to work these 5 minute reversals to the upside. So
Do you ever do short common instead of just using puts for downside?
I've never done it. Rob does talk
Okay.
about it. Rob does talk about it. Maybe that's something you could show me because I would love. I think I would love to do it because I could. I've had other traders tell me you could put in hard stops and you know what I mean and get
You
out of that
can.
thing. So
Yeah,
um,
it's the exact opposite of trading long, right? You just sell first, right? But it's the
yeah,
exact same mechanics otherwise.
heck yeah,
Um,
that's what I'm talking about. Heck yeah, let's do it.
so okay.
Let's do it. I've never tried it.
Um,
I've always wanted to. I've never tried it. But yeah, so let's go back to new traders. The biggest mistake is not that you realize that the strat still takes work. It still takes work, and that's when people they kind of get bummed out because it's not. I'm like, dude, the market changed. Okay, the market changed. Look at your scenarios. Look at time frame continuity. It all changed. It's all red. It's all red, man. Why are you buying this? Reversal to the upside, so it's a lot of reminding people, hey, we still have rules. You need to adhere to the rules, and then they get the swing of it, and they go, okay, now we need to,
yeah,
that's where the discipline comes in at. I need to actually learn about stops. I need to actually learn about trading psychology. Then
yeah,
but then they become a better trader. Then they come back to the strat basics, and that's, and then they're they've either made back their money, they're broke, they're even, or they're, back up where they were when they were, first getting in here. So
Yeah.
um
I remember the first time I saw the Strat. I like it was a small world, right? I used to live like 2 blocks from Rob's office, so I walked over one day and I was like, "Wow, that seems to happen a lot." Right, and it changes how you kind of think about the market a little bit, right? Like, it's just a language that you can use to describe different scenarios, right? Like once you know what a 312 is, right? Like you can just see it in your head when you hear
yeah.
the numbers. So I always thought that was interesting. Why should new traders look at the Strat as, as they're out there experimenting and trying to figure out, a style or a system that works for them? Why should they kind of check the Strat out?
I think they should check out the Strat, just because we show you what buys and sells look like based on um, three universal truths: broadening formations, time frame continuity, actionable signals. You don't need to necessarily be a stratter, so I'm not trying to make everybody stratters. If you like you were saying, you're watching everybody. Let's just say people like to trade wedges. They wait for the price to compress. And then they buy it as it breaks out. You can learn a lot by just looking at time frame continuity. You know what I mean? Looking at all my charts. Is it all green? Is it all red? And then also there were scenarios, just like AMD. Let's just say AMD, you had a really good trade. AMD's to the highs. Now it starts selling off. Now I got a 2-2 reversal down. Am I going to take my profits? You know what I mean? So because that's what I would tell people. You know what I mean? You don't need to do all of the strat, but if you just know the reversals, it helps you in making those decisions. You know what I mean?
It
Okay,
does.
I think I'm gonna take my profits here. You know what I mean? And then you take them, and then maybe you see on Twitter, yeah, I made 2,000% on AMD as it started, and blah blah blah, and or I bought. I bought Facebook before it died and everything. Before it opened, like all these percentages down. But I like the average everyday trader who goes, I bought this stock, or I bought this option. It went to the highs, or what I was trying, direction in my favor, and then I use the scenarios to know when I need to cut it, and
Yeah.
I didn't just hold on to it, and
So
I think
I
that,
think that's the hardest part, right? Like when to
mhm,
take profit,
yeah,
right? Because it sucks. Like I've done this so many times. You get a great entry and you get the nice run up, but then you just
yeah.
ride it all the way back down again, right? It's just like, oh,
Yeah,
you know,
and that's a risk, and
yeah,
and that's nothing I would tell new traders. It's all a risk, and if you're a swing trader, it's also a risk. Like me setting my stops even, just like you said. What if that large wick is coming down, and now it's a shooter, and that shooter goes in force? I get stopped out even. Now I don't lose any
yeah,
money, but I watch this thing all week, brushing my teeth in the morning, looking at my phone, going, "Heck yeah, I'm doing great." And I didn't take any profits as this thing went all the way down, and that's also a risk too. So I think
yeah,
a good method to balance between both is you can get in. Let's just say you get in with 10 shares, just to make the math simple. I get in with 10 shares as it's going up, and then once it reverses, starts to reverse, I could take a portion of it. Let's just say I cut half, 2-2 reversal, way up here, half, and then I leave my remaining 5 there as okay, and then I can decide, okay, I'm going to let this thing stop even. I don't lose anything. I still made money, but then okay, you know what I mean. You can decide, or 2-2 reversal down, I take 5, and then okay, oh, I'm still in. Now I can add that 5 back. Now it's still moving. You know what I mean? So
yeah,
I think that's the only me personally. That's why Common lets me have the flexibility to make those decisions, because it's kind of slower, and
yeah,
those hard stops. And then again, I can if I take that 5, I made some money. Okay, paid myself, made some money, and then it starts working again. I'm still in. I'm still in. Then I can add and then push my stops way up. You know what I mean? And then
yeah.
now you're actually working the open position. That's what I like there. So I forgot the original question. I'm just saying that's what that's I get so caught up in telling people to strap because I don't want people to lose. I want you to be able to buy a stock, and I'm not going to say your Palantir is your baby. That's your baby. You love it. I want you to be able to buy Palantir on a month of reversal up, work that thing until it reverses down, and then you take some profits, and then
Yeah,
I'm back in Palantir because they got you're a different trader than I am. You read the news. They got government contracts. You got all these other people investors in this thing. Okay, fine. I just want you to be able to find the reversals, work it, and then take some profits. But you're an investor, and that's another thing too. Investing and trading is two different things. That's
that
another
is
thing I need
true.
to tell people all the time. Actually, one of my good buddies, he brought that point up to me, and I had to. That was like a light bulb moment for me as well. Like, even if I'm trading quarterlies or monthly charts, I'm still just a trader because as soon as it starts going down, I'm out. I'm not waiting for
Yeah,
this company that makes number three pencils to be the biggest thing in all of writing utensils. You know what I mean? I'm not waiting for that. I'm waiting for they love them. And then nope, they hate them. I'm
yeah.
taking my profits.
Well, so I think that's one area where people get really screwed up, right? So like I always like to say, like, I don't like thinking of things in terms of a trade, a short term or a swing or a day trade, right? Because like I'll ride
Hmm.
it where it goes, right?
Yeah.
But if I get into something with the mindset of trading it, right, meaning
Hmm.
shorter term,
Yeah.
and then I find myself talking about it as an investor later, right? I've screwed it up, right? Like that, and the same thing in reverse, right? Like if you go into something with the idea that you're going to hold this for 10 years, right, for a long time,
Yeah.
right?
Yeah.
And then you start looking at it and making decisions based on short-term price movement, right? You're also doing it wrong, right?
That's
Like
true. Hmm.
staying true to your purpose, right? When you start something, right, I think is important.
Hmm.
And people blur those lines all the time. I think it's a big mistake that a lot of people make.
I
Um,
think that's huge. That's awesome. That's very true. If you look at Ford, everybody knows
yeah,
I've been talking about Ford. So on yearly charts, Ford was a hammer in force on the year last year. So it was a 2-2 reversal up on the year at $9. And you know, I'm on this thing. Even before anybody else is talking about it, even before the news and all that stuff, I don't care. I'm on Ford. I know what I'm doing. It's $9. It's fine. I'm buying common anyway, and I'm working this thing. But I also know I'm not an investor. I'm a trader. And
yeah,
what I would do, and I would love to tell everybody that I bought Ford at $9 and then sold it at 25 because it just hit 25 like a couple days ago. Uh, I didn't do that. What happened was I knew this reversal was in force on the yearly all year, and I would get in, work it till the week tick down, take my profits, and then would crap out and be nasty for a couple weeks, and then it would reverse back up. Now I'm in because I got bigger time for what I mean. I got a bigger reversal. I'm working now. I'm in, and I would wait till it ticks down, then take my profits. I'm out. You know what I mean? And that's how I would work it. Now, good stratters would work both sides. They would all right, they take profits here, work puts all the way down. Okay, now it's like $14. It's reversing to the upside. Now buy calls and once you learn the
yeah,
strat, you can do all that crazy mess. But you're 100% right. I was not an investor in Ford, and I'm still not right now. I was just trading the reversal, and it was good for me. You know what I mean? It was
yeah,
it's a slow stock. It was a good stock for me to just trade. It wasn't crazy volatile. When it was green, and it worked. And then you can clearly see, okay, 2-2 reversal on the, or a 3-1-2 reversal down on the week, and they're selling it. Okay, fine. We're going to cut that profit, and I'm going to wait
yeah.
until
No
it sets back
attachment.
up again. Yeah, yeah,
Yeah, I
yeah.
love that. So let me ask you, we're running low on time, so I got to start moving towards the end of my list here. All right.
I talk too much.
No, man, I love listening to you. Tell me, what advice would you give someone brand new to trading? Like they just opened their first chart and they're like, I want to start trading. What would you tell them?
Very first chart, I want to start trading.
Yep.
I'm biased. I'm going to say, come over to the Strat, come see me. I'm going to help you out. But honestly, what I'm going to say is, look for don't gamble, and then trade common. No matter what trading system you want to, what I mean, you want to buy. I know Jake's really into supply and demand. Okay, that's good, but and then stick with that system and trade common, and allow yourself to actually learn what's going on. And paper trade, don't, you know what I mean? Don't at the same time, don't get on Twitter and tell people you made all this money. It's paper trade. Don't do that either. But and then you'll get to a point in paper trading where your psychology is not there. The trading psychology is not really there. So you get to a point where training stops, and now it's time to take training wheels off, and now it's time to start trading real money. And then
Yeah.
when it comes to trading real money, start small. I would rather you work something that has like Apple, who has a lot of data you can work with, on the monthly charts, as opposed to like Upstart or AFRM that doesn't. It's or DWAC that has no. And it's brand new. You know what I mean? You can make money doing that, but no matter what you do, I would say trade common, start small, and then slowly build your own. Um, Along with whatever system, I'm going to say the strat, but no matter what system you adopt, come up with your own rules. I only trade these. I only trade this reversal. This is what I do. Hammer and force. That's my jam. I like doing that. Or I'm going to work the hammer and force, and once it goes two down, two reversal down, take my profits. You know what I mean? Um,
Love it.
or Yeah, create those trading rules for yourself, and then realize that when the market changes, you might have to adjust your rules. Don't be radical. I'm never trading Fridays ever again. I'm never trading anything after noon. You know what I mean? After 12 o'clock, because at the same time, because the market changes, there were
Yeah.
times when,
Or symbols, right? Like
yeah,
some people got destroyed because they were just addicted to growth names during the last 9 months when that's all they did was sell off, right?
yeah, yeah. And if you didn't know, and that's where the strat comes in, because if you didn't know, what reversals look like to the downside, or if you just don't know, red means they're selling it. You got wrecked. And people will show me a chart that's completely, it's red on all time frame. It's way down here. You know what I mean? I'm sure I got some stuff on Twitter right now asking me, is Facebook bullish right now? Like, are you serious? Look at the red, not bullish. Okay, not bullish. So just understand, red means sell, green means buy. Buy it when it's green, sell it when it's red. Give yourself time to learn, and um, you're not going to be Michael Jordan in the first year. And if you are out there and you got some good dunks on some people, you're making some good money. You still need to adhere to them rules. Keep your stops tight, because you got to be able to keep that profit. Steve Burns has a really good quote. He says it's easy to make profit. It's harder to keep it.
Yeah.
So it's easy. It's easy to buy it, and I mean, I bought this thing in my SMA in the strat and in the strike price and I bought it down here in supply and sold it in demand, blah blah blah. And then, but okay, that was that trade. Now we got a new moment, new participants, new day, new everything. And now what are you going to do? You know what I
Yeah.
mean? So don't get stuck in your glory days. It was awesome. This trade was awesome. Yeah, that was a cool trade. It's also 2 o'clock on a Friday. That happened on a Tuesday, dude.
Yep.
you know. So
Well,
yeah.
that's good advice. So stick to your system, trade common, give yourself time to learn, start small, and check out the strat. Did I get that right?
Get it, yeah. Check out the strat. Get educated. Get educated. Even if you only learn one thing in a webinar, or you only learn one thing about, just about options, like you said, theta. Go ask your homeboy Theta why you can't hold the option to the end. He'll tell you why.
Yeah.
But just learn, get that education. The strat makes it easy to get started. The strat, you don't need hours and hours and hours of screen time. It's easy to get started, but again, it takes work. And I want you
Nothing
guys.
worth doing is easy.
That's right. That's right. And I want you to succeed long term, not just for the moment, because yeah, you might be 20, 25, 26, 20 something, and this is fun, but then you're gonna get to a point where you're like, I need to start actually making long term decisions on this stuff. And am I a real trader, or is this a game? If it's just a game, go ahead and take your money and close your account, because it's going to take hard work to
It
be a
is.
good trader.
I always tell my 2.5-year-old son that trading is just a video game that daddy plays. Right. So
Yeah,
it's
that's
just
true.
funny.
That is
So
true, but it's more like I would say it's more like my kids hate it because I got one of them little Nintendos. So I got
yeah,
the old school Nintendo with all the games preloaded in it, and it's a real Nintendo, not one of them like bootleg things. Anyway, my kids they'll play their video games and they get respawned at the same point. Okay, we're playing and we die. Okay, fine, we're
yep,
playing and we die. And my kid loves Sonic, so I'm gonna show you the real Sonic, and it was Sega Genesis, but then it kind of leads into Mario Brothers. But you only had three in Mario Brothers. You only had three lives. After
yeah,
those three lives, you keep falling in this hole. You're dead. Game
yeah.
starts
You got to
all
start
the way
over.
over. Yeah, you could be on level 8. Game starts over, and my kids hated it. Now they're getting better, but they had to build that resiliency. But I would say if trading is like a video game, once you get good at it, you have fun with it, and that's why we post a lot of jokes and memes and things like that because it is fun. But it's more like the old school video games where if you mess around too much, you will get wiped out. You got to start all over. And I don't want you to start over. You don't respawn. Okay, that's what I'll say.
I appreciate that. I think a lot of people can relate to that. So, Jermaine, thank you for being here. It's been an honor. We've talked for a while. I'm going to have to cut it here before I get yelled at. But thank you again. Any last words?
Thank you so much. It was fun. Check me out on Scipia Group. Check me out. I got a weekend shift. It's a show on Saturdays at 1 p.m. It's live, or I show the strat, I slow it down, and we look at the charts where the market's closed, and we just have a good time. We laugh, and we have a good time. Check me out on Twitter, Cyberdog2. I am the Strat Soldier, and keep those stops tight.
That's good advice. We'll make sure there's links in the bottom in the description to Twitter, to Sepia Group, to your shows and everything. So it's easy for people to find when they watch this. Thanks again, man. It was a pleasure.
It was fun, man. Thank you so much. Thank you.
Yeah.